So welcome to the market report for October 2022. It's definitely been an interesting ride. We're seeing some of these headlines. U.S. housing market stares down an even bigger economic shock. Mortgage rates near 7%. Mortgage rates reach highest levels since 2008. 30-year fixed rate mortgage jumps over 7%. It's true. But I got to tell you, the U.S. economy, the housing market is still remaining strong. People are still out there buying. Rates are at 7%. The biggest thing we're seeing right now is when we have a lot of volatility. When we jump from 6 to 7, people are like, oh my God, wait, what's going on? We're going to stand back. But now that rates have settled around 7 for probably close to 30 days, people are saying, okay, if I can afford it at 7%, 7 and a quarter, 6.75, I'm out there, I'm buying. We're still seeing some multiple offer situations. People are still buying. And, for a lot of people that bought homes 20, 30 years ago, we get reminded all the time, these rates really aren't that bad. We know it was artificial 2.75, but you know what? We're not even hearing consumers say, wow, it's no longer 2.75. They're saying it was 6, now it's 7. If we want to buy, we're going to buy. And the reality of it is people are always going to buy and sell real estate, as things are coming around, depending on what life cycle works for them. So we talked a little bit about mortgage rates going in. The aim of the Fed is to tighten, is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed actions are working. So we're not seeing as much craziness as we have before. But like I said, we still are seeing good activity out there. And the reality of it is that's what we want. We're creating a little bit more of a balance. Prices are not going bananas going through, but they are still moving around. The root issue of what drives housing prices is always supply and demand. And, when we look at the Bronx and we look at Westchester County, our supply is still down. We're probably down for new listings year over year, probably about 10%, 14%. And I think that's going to continue as we see into 2023. The good news is we've seen kind of price appreciation go up a little bit. We'll talk about that in a minute. When we look at the amount of showings, they're down about 12%, but the inventory coming on the market and staying a little bit longer is keeping those levels of the market kind of stable. As we see a little bit more come on the market, we're seeing, them come off the market. If they're renovated, if they need some work, they're going to sit there a little bit. But we are still seeing some balancing out, which was the, point of raising the rates the way the Feds are doing it. Mark Fleming, chief economist over at First American, wrote, "Well, the market's considered overvalued, may need to adjust to the not-so-new reality of higher mortgage rates. Housing market fundamentals still support a modernization of annualized housing price appreciation rather than a sharp decline." I don't think we're going to see big declines. Could we see a little bit? Absolutely. I think there's a chance we see 5, maybe even 10% over the next 12 to 24 months. But the reality of it is that, we saw 30, 40% appreciation over the last couple of years. So if we give a little bit of it back, we do. Like I said, the difference, we're not seeing 10 offers taking market value and raising the bar. We're seeing that market value probably kind of stay steady and a little bouncing depending on the property. We just had a property in Mount Vernon go $50,000 over the asking price with multiple offers and 25 people at an open house. That happens. And we have some properties that sit on the market for a month or two without an offer. It's looking at the property specific. What can we do? What do we need to change? What different things can we do? Marketing, reaching out to get opinions of other people. But it's important. The market is not going to sharply decline down. I think an average of the economists are saying that we're probably still going to have anywhere from 2 to 4% appreciation in home prices over the next year. And I think there's a good chance of that because, like I said, there's not a huge amount of supply coming on the market. So some of the big reasons to keep in mind of why people buy and sell properties: security and stability, privacy, personalization and home improvements, health benefits, financial education, civic participation. The average net worth of someone that owns a home after 30 years is dramatically higher than what the average net worth of someone that just rents, during the course of their life. So people are buying long-term investment. Good news, things are moving. If prices priced properly, marketed right, presented right to the community, they are moving. If something overpriced, even during the boom days, it's sad there. So if you have any questions, feel free to reach out. We can go over different scenarios, how to maximize, maybe selling the property as is, different ideas. And, if you know anybody else looking to buy or sell, keep us in mind as well.